So the Federal Reserve is about to lower interest rates in a much anticipated Fed meeting coming up this week. And here's the thing, they're going to drop the rates. This we know it's already going to happen, but it may not lower interest rates. And it's leading to the number one reason that a lot of people are locked into their current home and absolutely not going to sell their property anytime soon. This is Ron Wojciechowski at LPT Realty, and what I want to talk about today is what is going on with the Fed and why a Fed drop does not necessarily translate to an interest rate drop. So what we have to think about is that the market is anticipating this interest rate drop, and they've been doing it for quite some time, and it's stretched out over the whole year. We are at a 23-year high for Fed rates, and now we're about to get some relief. The problem is when that quarter-point reduction comes in later this week, and write that down, it's coming this week, the market has likely already priced it in. There's some optimistic people out there thinking a half point is coming. I don't think that's going to happen. I think that might happen in a November meeting right around the time of the elections, or possibly at the end of the year, early Christmas present to drop that other quarter point. So, you know, what I'm focused on right now is a quarter point coming this week. And understand that when the Fed drops a quarter point, that's the price that bank is borrowed back and forth between the Federal Reserve and the interbank system. That's not what consumers pay. So if the rates have already been coming down the last couple of weeks, anticipating this, you may not see much of a drop in the next week or so ahead, because there's going to be another 6 weeks before the next Fed meeting. So that's where the rates are going to hold firm. Market conditions are going to prevail. So if the Fed drops quarter points, maybe the mortgage rates drop less than that, you know, 1/10%, maybe 1/8%, but not the whole quarter point. So this is locking in current homeowners that have bought in the last 4 or 5 years at rates 2, 3, 4%. For them to go out there and take a rate in the 6s, it has to be a phenomenal deal for them that really makes sense, because they don't want to give up that interest rate that's super low right now. And if you could imagine what it would be like to jump up several $100s in payment to get the home that you want, this is what's holding them back. It's a logjam of inventory that's not going to change quickly. This will be something that changes gradually over time. Now, the good news is this. Rates, a year or so ago, we're in the high 7s. That has come down to the low 6s, mid 6s, and this is dropping payments by $100, $200 a month for those that are now looking to refinance. That window is opening. So if you are, in a situation where the rates that you have are super high and it's choking you off, a little relief is on the way. And if you're considering a refinance, my rule of thumb, if you can save 1% on the interest rate and you can get the cost of the refinance, the closing costs and whatnot, paid off in the next year and a half or two, and you plan on staying in the home, long term, longer than that, it's probably a good bet. 2%, well, that's great. That's nirvana. If you can go from 7.7 down to 6, or maybe 5 3/4, that's really something that you should be strongly looking at. But also understand, if you're going to move in the next year or two, you'll never get that money back. You're probably better suited to put a little more money towards principal and just taking the balance down as opposed to paying for a refinance. So hear that again. If you're going to move in the next year or two and you want to reduce what you owe on the property, pay directly to principal, save the cost of the refinance, put it where you're going to net more money at closing. So that's going to help. So, to recap, what I'm seeing this week, Fed absolutely going to drop. Interest rates will go down a little bit, but not as much as people are thinking. And it's not going to be enough to get the logjam of homeowners that want to sell and want to move, but are held up because they don't want to give up those interest rates that are super low right now. Now, I would pose this to anybody who's in that situation. How long do you want to put your life on hold to get in the house that you really want to be in versus the one that you're held hostage in right now? And is that cost enough for you to wait another year or two till the rates get back to where you hope they'll go to? But I'm going to say this. The days of 2, 3, and 4% interest rates, that was probably a one-time anomaly, never going to happen again. If they get in the 6 range or even in the 5s in that place, that's probably the lowest they're going to go, because economic conditions don't support those rates being artificially suppressed in that range ever again. That was a 100-year thing. Maybe I'm wrong. I don't think so. So take a look at the interest rates later this week. I'm telling you right now, they're going down, but not by as much as you think. If you got questions or you want more information about this, just drop me a message. Happy to help. This is Ron Wojciechowski at LPT Realty.